Hey everyone, welcome back to another video here at FiscalVoyage. My name is Felix, and in this video we're going to talk about three different aerospace stocks that you should be looking at and potentially buying. Two of them I think are a good buy. One of them is a really good buy, and the other one is a decent buy at current prices. And the third one, it's kind of speculative. And we're going to talk about on July 12th, I made a video of these same three companies, and we're gonna go back into that video and see, what was my recommendation then, and we're gonna look up and update it. How are they doing now? So you can find a link to that video over here, or over here actually on the left side, and check out that video on July 12th when I made a video of these three aerospace stocks. But first, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. You see here my last video on July 12th, I did a video called 3 aerospace stocks to watch and 1 to buy now. And the 3 were Lockheed Martin, ticker symbol LMT, Raytheon Technology, ticker symbol RTX, and Boeing, ticker symbol BA. So some of the metrics, I'll have the link here for the video. As you can see, some of the metrics, a lot of the green represents who won in that category. And you can see Lockheed Martin won more than Raytheon Technology, and then Boeing, we all know the situation that Boeing is going through. So at the bottom of the chart here in this video, I gave my recommendation. You can see here Lockheed Martin I gave a buy recommendation. Raytheon Technology, I gave it a buy, and Boeing, I gave it a hold. So we're going to do an update on these 3 recommendations and see where they are right now. And you can see here I made this on July 12th. That day price was Lockheed Martin 349, Raytheon Technology at 59, and Boeing at 74. So let's go look at them at current prices. So for Lockheed Martin, I made the video on a weekend. So we'll use July 13 here, or July 10th at 349. And you can see since then, the stock is up about 6%. It went down because it went down like almost 4 or 5% because of the earnings release that it just announced a few days ago. But it was actually pretty good, but the market didn't like it. But overall, I think it did pretty well. But right now it's up about 6% since that video. So let's look at Raytheon Technology next. So you can see here Raytheon Technology, I made a video on this day on the weekend. So we're going to use July 10th price. And you can see here is up almost 6% at 5.3%. Again, we're going to go over this company right now to determine if there's still a buy at these prices. So next up, Boeing. You can see here Boeing, I had it as a hold, and is down 5.6%. So we're going to go over all 3 companies fast graph because all these other metrics are still the same because they're looking at from 2010 to 2019. So fiscal year 2020 hasn't finished for all of these. But we're going to look at the fast graph for all 3 of these and determine if it's still a decent buy for Lockheed Martin, Raytheon Technology, and Boeing. Since it's down 5%, is it a buy at current prices? So first off, let's look at Lockheed Martin. This is yesterday's closing price at $368. You can see overall the long-term normal PE multiple is 17.4. Right now the multiple is at 15, so it looks to be undervalued based on this long-term multiple. Again, S&P credit rating of A-, which is investment grade, which is excellent, and a 66% long-term debt to cap ratio. This is in the high end, but this industry is very capital intensive. So and they're very manageable. They have a nice credit rating, and the interest coverage is very high from the last video. But if we shorten this time period, you can see here the normal multiple is at 17.4 and the blended PE at 15.3. And there's been times here, as for example, December 31st, 2018, where it had a PE of 14, and then in March with the shutdown and such, it had a PE at the end of closing of March at 15. So basically, what I'm trying to tell you here, it looks to be undervalued based on this historic data for Lockheed Martin, and the fact that they increased the dividend about 8%, almost 9% recently. That's very positive news. Earnings are expected to grow by 12% for 2020. Considering all the things that's been going on, they're still expected to grow earnings by 12%. And then in 2021, 7% growth, and in 2022, 8% growth. It is, however, much slower growth rate than the past 2 years. You can see here 32% and 25%. These kind of growth rates really what's been driving the stock to go higher. Again, earnings or price follows earnings. And you can see here, if you were to buy it at yesterday's closing price, and I think today is up. If we go back here, what's going on with Lockheed Martin today? Yes, up slightly. So it's not a big difference. So if we go to yesterday's closing price, you can see here your total expected annual rate of return, 16.7%. That's outstanding for a high quality company. A decent dividend yield, which is much higher than the S&P 500. Earnings yield is right there at where I like to see it, at 6.5 or higher. Overall, Lockheed Martin looks very attractive at current levels. If we look at the free cash flow, you can see here the free cash flow is very safe. Dividends very safe. The free cash flow is expected to be about 43% payout ratio of free cash flow, so that's very positive. So the likelihood of a dividend cut is very, very unlikely. So overall, I think Lockheed Martin is a very good buying opportunity now, even though it's higher than when I made that initial video. But that's okay. Great buying opportunity right now for Lockheed Martin. So I think you guys should definitely look into this stock. So let's look at Raytheon Technology next. So we see Raytheon Technology. As you can see, earnings is more cyclical than Lockheed Martin. You can see here there's been down years for earnings. For example, in 2012, 3% negative growth rate. 2015, negative 8% growth rate. And this year, they're expected to decrease earnings about almost 40%. Of course, this is because the company split off two other companies, Otis and Carrier, the AC company. But you can see here the dividends been growing very nicely throughout the years. But another positive things with this company is that earnings, you can see here, expected to grow 29% for 2021 and 28% for 2022. If we go to forecasting, you can see here, and there's a lot of analysts here from FactSet, 19 analysts predicting 2021 earnings and 16 predicting 2022 earnings. So even if the company were priced at a multiple of 15, you're looking at a decent rate of return, about 9.9, or if it goes up to a higher PE, 18%. So the PE ratio is high, and this is because of the fact that the earnings are expected to be down. But if we look at the PE ratio on 2022 expected earnings, you can see here, if I shorten this, you can see here, let me fix that here, from yesterday's closing price to a multiple of 15, you have almost 10% annual rate of return. And the dividend is slightly higher than Lockheed Martin. Again, high quality company. It has a better long-term debt to cap ratio at 32% compared to Lockheed Martin. But overall, solid company. I own both Lockheed Martin and Raytheon Technology, but today's market presents a nice buying opportunity, a better opportunity for Lockheed Martin, but Raytheon Technology does look like a decent buy at current prices. It's not an outstanding buy, but a decent buy at today's price. So next up is Boeing. You can see here it's down today about 0.56%. We all know the trouble that Boeing going through. This is why earnings is expected to be, well, last year when they closed earnings, was down negative $3.47, and this year is expected to be negative $9.74 a share. But they're picking it up in 2021 by $4.40 and $7.81 in 2022. Right now, I think Boeing is still hold. It's very speculative. You got this company, you're gonna have to do a lot of research, read the earnings report, look up all the details of this company because it's very speculative right now. I don't think the company is going anywhere. It's gonna still continue, being in business. They have their S&P credit rating did downgrade it. Right now it's a triple B minus, which still is an investment grade, but in the low end of investment grade. Long-term debt to cap at 117%, which is high. But overall, this was a very solid company, and I'm sure in the future they're gonna be back and making profits. But right now it looks very speculative. I'm sure if they have a good quarter, the price would jump up. And I'm also sure if they have a bad quarter, the price is going to drop tremendously. So this is why this company is very speculative right now. So I still give Boeing a hold at current prices. You have to do more research on that. But overall, it was a solid company. Right now, they're not paying a dividend. They had to freeze it and cut it. And you can see here the earnings, it's not able to support that dividend. That's why they had to cut it. But the positive, they are expected to be in making profit next year. So that's good news. But right now, it's very speculative for investing in Boeing. All right, so those are my thoughts on Lockheed Martin, Raytheon Technology, and Boeing stock. Let me know in the comments what are your thoughts on the three companies, or what other aerospace company that you're very interested in at today's price. So let me know that in the comments below. Overall, I think Lockheed Martin is the best option at today's price versus the three. But let me know in the comments which one of the three are you buying, or is there another aerospace company you're buying? Again, thank you for watching, and if you're new to the channel and enjoyed the video, make sure to hit that subscribe button and as well as that like button to help with the YouTube algorithm. And I'll see you guys in the next one.